let's go to the S&P 500. A lot of equities traders in the room here. Let's go through that. Just scroll back to June. It's currently August, and this is how you guys can practice. This is how obviously I can show you and my thought process, and let's just start going through and analyzing these charts, okay? All right, 619 and 620. Did we use this example before? But this is one of the confusing ones where you have value right at the same level. We've got value migration lower. What did this day try and do? Somebody tell me what this day did and what you see there.
Tried to test the point of control from the prior day.
Yeah.
It failed and then migrated lower.
Absolutely. So in my mind, there is information in that. There is a story unfolding. Remember, we used that term yesterday. What's the story unfolding? On June 20th, we rejected the point of control from the 19th, and we traded lower all day. Value migrated lower. It's not really balanced. Okay? '21st. Very clear story. We open, gap down. We trade a little bit. We spike up to kind of retest that value area from the prior day. Clear rejection there. I know how I'm trading all day. In fact, I may have been anticipating that based on where we opened, the value migration coming into that, and I may have been stalking a short from that opportunity there. Maybe I was long and wrong there. I don't know, but that's the thought process. Now, what about the 21st and the 22nd? Clearly the 22nd has two distributions, but it's pretty much balancing right on top of the 21st. A little bit of value migration higher. Poor high, okay, a feature to observe. Let's look at the day. Okay, so it is working a little higher, but it's still within balance, and then this balance area is right in the middle of value. So it's not holding above value, okay? I would lean towards balancing, merging these into a balance area, okay? All right, so we have a two-day balance. So what we're gonna do is we're gonna use that level, okay? Okay, and now let's look at what, now we have a two-day balance, 21st and 22nd. Now we're in the 23rd. We open inside this area, okay? Trade lower, okay? We could potentially look for short opportunity outside of value there, but we get a very rapid rejection. Perhaps even within this 30-minute period, we got all the way back in there. Another test, and then buyers continue to hold this up, okay? Expectation is for a move across to the other side of the distribution to test the other side. That's exactly what we get here. Tomorrow, I'm going to teach you about every single expectation, these different scenarios, where you have risk reward, where you can identify it, and where those trades are. We're it's unavoidable to talk about them for me as we kind of walk through these days, but that's what happened on that day. We're left with a poor high, okay? Balance, right? Even though, we rejected the lows, we're kind of working up here toward the upper end. And this is very important as well. I should have mentioned this. I always keep multiple profile charts up. One is just composite structure like this, and the other I will never merge any days because, for example, the 23rd gives me certain features, its value, its poor high, things that I want to keep track of. But my composite chart, as we head into the 24th, I don't get to see the 23rd anymore, right? Because I've merged those days. So I need two different charts, one where I see day to day and always keep them separate, and one where I've got my composite structure. So notice the value area of the composite changed a little bit when I merged those days. We need to adjust that as part of our preparation coming into the day. Okay, this day, gap up, traded up, zipped right back down into this area, this little low usage notch right there, back up, and then was just extremely choppy into the close. But it's funny, it was kind of holding that value right there. I don't know if there was any scalp opportunities for a couple cents. I forgot this is S&P, this is not crude, so it's a little more back and forth than what my favorite market is. Another poor high up there though. Keep that in mind. This could be a situation where you end up deciding, you know what, I'd like to merge several of these days into an overall balance. I'm going to keep it simple. I'm not going to try and do too much of that. Okay, we're just going to say balance or not. This is a tough one though, the 26, because it in terms of the story, it does kind of come back to the composite structure after an attempted gap away, but it kind of holds above it, so I'm just going to keep it separate. We'll just make a decision. This day, the 27th, it's an open inside of our value area. Okay, it tests up to the point of control, fails from there, we get below value again, and we really start to hold, and we trend lower into the lower end of this. Okay, and in fact, this is kind of important. But we've got to start our analysis somewhere, right? I can always keep going backwards and say, oh, there's a reference. But we had this value here, which this was a retest of on these lows as we formed this composite. And this day here rejects this structure ultimately and trades all the way down through there. Great place to take profits as we reach the other side of a distribution and we see the bounce into the close. Okay, no balance there, so I'm going to keep that separate. Probably going to stop using this because we're starting to form perhaps a new balance. And in fact, we're not really going anywhere. Couple day balance here. This day was iffy. This day tried to get lower, and then this day comes right back in. Okay, so a lot of balance going on here. Let's keep it simple. We got these 2 days. So we're no longer using this. We're no longer using this. We're now going to use this 2 day. Okay. Nice looking day here. Open here. Fail. We see a little bit of buying from the composite value low. The sellers reject. We continue. And this is where you know what your strategy is going with that trend. Probably went into some older feature down here that we don't know about on this chart, and then got a little bounce into the close. So nothing really new there. This was a trend day. It does not invalidate the current structure, right? We don't get rid of that composite just because this trend day went through it. Trend days don't really affect the structure. This day, opened here. We've got prior value and that composite structure. Great trade location there for a potential short. Comes down, leaves a weird little poor low, and then drifts back up. Kind of a boring day. This day here, we're still using this. We open back inside the balance, so it's rotational behavior at the open. We don't have some crazy expectations for a trend day. We monitor what unfolds. We come up. We do leave a poor high there. We start to form this poor low here. It breaks through it, bounce a little bit, break through, back into this day structure. Nothing fancy about what happened there. But clearly the balance was back up into this versus the prior day, so merge, no merge, it's not a merge. Oh, look at this choppy market. All right, so this is July 3rd heading into July 4th, so this was a holiday, so we're not even gonna worry about that. I am gonna put it inside, even though you might argue that this balance was entirely below the main balance. It was a holiday, there's really nothing to it. I'm just gonna put them together. Okay. This invalidates our old structure. This goes right through the middle of the new one, so let's begin using this new structure here. Okay. Looks like kind of a messy day where we tried to go lower. You could be going for shorts there, perhaps with a target of taking out that poor low. Couldn't quite get to it. Reverses back in. Now you know it's a rotational a balancing environment, and you would want to be fading these tests, looking for reversion and more rotational behavior. Balance for me, I'm going to merge them. Excess of the low, what's the story? We reverted back into this area here. Merge with next profile, adjust our value area. Okay. This day here, this is a day where you say we could trend, we could move. This is a slight gap. This is maybe it's a gap. I forget where the prior day's range was, but it's a gap outside of our composite value. So we could be looking for fading any retest back into that structure for a move lower. Ultimately, this day was kind of a weird day where you get the buy the dip people in the S&P and it comes up, and then but we do get a weak close. Overall balance there. What about this day? Now here's an interesting thing. When we don't have composite structure to lean on, we just lean on the prior day for the most part. We lean on whatever we can, but composite structure takes precedence. It's the most important when it's available to use. This day here opens just below value. Perhaps you could be looking for some shorts on there. Ultimately, it's very choppy. Within the second period, boom, it reverts all the way into here. Now, these retests you want to be buying. You want to be fading those down moves for the move back to prior value and the move to perhaps retest our composite structure. Okay. Overall, I know this day went up a good bit, but it's still overall a breakdown from a multi-day balance. And overall, this value is it's entirely overlapping. Let's see what it looks like. Pretty good distribution. It's got a little something going on up here, but it's got a nice main distribution and the value being represented of that. So now we're actually working with two value structures for this day right here, and we use both of them. Remember, more recent is more important. Okay, so we give a little more weight to the recent activity on the composite starting on the 6th. We open, this is a situation where you might see some real crappy type of price action in between two composite structures. When you open right in the middle of that, a lot of times you'll see a little ping pong. Which way are we going to go? And you have to just let the market show you, okay, you know, we're accepting into this one, or we're clearly rejecting this one, that type of thing. Given that our general rule of thumb is to put more weight towards the more recent structure, you very well could have gotten long from the retest of the recent structure. You definitely want to be taking profits into this structure here, just in case it's going to hold and we are going to see that ping pong type of behavior. But what do we see? We see it actually break through, work all the way to that point of control. You could have either had targets, point of control, or the other side of value. This is how you practice. This is how this just repeats over and over and over and over. But you guys see that markets are really respecting these structures. I mean, this is the S&P 500. This is the most traded vehicle on the planet. And I think crude oil is even better. I just wanted to show S&P because there's a lot of equities guys in here today. So this is how you practice, and this is how it works. Any question at all? I think we've covered a lot of the principles, all the terminology, and hopefully you're gaining an understanding of how these things work. Tomorrow we will really dive in very, very clearly, and we will do a study on market dynamics, which we've kind of started to hit on today. You started to see some trade opportunities. We're going to clearly lay out all of those trade opportunities as I see them, and how we can take advantage of identifying real risk reward based on real market generated auction market principles, not just an indicator is overbought here, so I'm going to short, right? Very, very, very different type of analysis we're doing. All right, thanks guys.